Hey, hi everyone. This is Malan. Today I'm going to record a quick video to give you a little bit more crucial insight into the future of interest rates and their impact on the real estate market. So let's dive right in. First of all, the mark your calendar for 6th of December, which is when the next Bank of Canada announcement is going to come in. And there's a lot of speculation whether the Bank of Canada will pause or they will increase the rate. Now, there are two schools of thought among experts. Some believe we are heading into a higher for longer interest rate environment, where others anticipate a rate cut by the second quarter. So, what does it actually means by higher for longer? Is the current interest rate of 7.2, the prime rate of 7.2, going to remain for next 2 years? Everybody seems to be having their own interpretation. So, let's look at the numbers. So, when a central bank says something about rates, we always take it with a grain of salt because they are making, just like you and me, they are making educated guesses. Recently, a senior Deputy Governor Caroline Rogers indicated a global rate hikes, which may interpret as a leaning towards higher for longer theory. However, if you look at the CPI, the Consumer Price Index, or the inflation data, the latest reading shows a slight decrease, which could mean the rate hikes have started to work. Now, for example, if I were to take the inflation data for month of September, which came in at 3.8%, and if you adjust the mortgage interest cost from there, we will see about 2.9%. And the expectation is for the October data might come even lower, and central bank might be hitting their target even before the actual target date of hitting the 2% number, even before the rate cut starts. So overall, it seems like Bank of Canada's measures have taken effect, and we will see a little bit more relief coming in terms of interest rate pretty soon. Now, another thing is the unemployment, which is inching up right now, and we are back to the pre-pandemic levels. In the mortgage world, we start seeing a rise of power of sale listings, and also we start seeing some delinquencies, and especially in the high-priced real estate, or in also in the rental spaces or investment property space. This factor is more supported by the Statistics Canada's recent research data that came out, which said it talks about more delinquencies in the private lending market compared to the main bank. So we see some cracks appearing in the real estate market in terms of delinquencies. Now, another factor that we also have to keep in mind is the mortgage renewal wave that we are expecting to come in 2024 and 25, 26. This is a crucial period because most majority of these mortgage borrowers will be renewing into double or triple interest rates than what they got in the previous years. Now, in addition to that, we also see the higher interest rates are stopping or taking confidence away from builders who want to build more. So, without the lower interest rate, the new construction is going to remain a big challenge going into the next year. And on a brighter note, I see that some of the big banks have started cutting the rates, and we start getting almost 5.5% interest rate from a couple of big banks. And if the US decides to cut the rates, Canada will follow as well. So the trend is, and this is the trend on bond rates is also shifting. So that could be an indication that we are in on the rate cuts most probably in 2024. Now, one other thing that we should not forget is the political angle. Because in Canada, the housing market is a too big to fail situation. Especially in cities like Vancouver and Toronto, housing is huge, and the government policies might intervene to stabilize the market as well. We've been hearing rumblings about rates going down, or banks, the regulators looking at extending the amortization, or it could be stress test going away, something like that, just to get the payments under control so that people will not get into a problem and government will not have a massive political problem in their hand. So based on all this, what's the takeaway? If the rates drop, my understanding, and we feel the house prices won't catch up a massive surge just like we saw before, I don't think house prices are going to go crazy up. However, most house owners and the investors are in the wait and see mode. So based on this information, with the political angle, with the inflation data, with the unemployment data, etc., we feel we are looking at a stable home prices for next couple of years, and with the potential rate cuts providing some kind of relief to renewal on mortgage renewals, or maybe a regulatory adjustment that will help the people who are renewing their mortgage. So overall, what I want to tell you is, Yes, we will see some stability going into the next couple of years. And of course, if you need any questions, if you have any challenges, if you have anything clarified for one of your clients, feel free to reach out to me. I'm always available to give you a little bit of expert advice if in case if you need. And I'm always here to advise and support your clients. Looking forward to talking to you soon. Take care and have a wonderful day. See you.